Hi, this is Aptamer with the Bulletin Board Heroes here at Zach's Traders Cafe for Friday the 8th of November. Starting off with the FTSE 100, which has done what we didn't want it to do, i.e. have two failures, intraday failures, through the falling 50-day moving average. That's up there at 82.60, and then break down below the floor of the channel from last November at around 81.30, and then finally break down below the 200-day moving average at around 80.95. While we're below that, we've got the risk of a full retest of the August support there down towards 79.20 later this month, rather belying the normal situation that you have at the beginning of November that's actually a buying opportunity for the market. In this case, in fact, we had our 150 points and then we went straight back down again, looking for at least an end of day close back above that 200-day line to save the day by the end of the session. Moving on to the DAX, and it's interesting to see here whether there's been a post-Trump climb down. So far, not as bad as the FTSE, but still above the 50-day line there at 19,000, just above 19,000, and also looking to break that line of resistance there from last month, 19,500. That's the range for the moment, and while we're at least below the October resistance line, we've got to wait for that 20,500 target at the top of the one-year trend channel. Worst case at the moment, I suppose, would be back down below the 200-day line, doing a FTSE 100, but ideally we stay within that channel, 18,900 or so. RSI pushed just on the wrong side of 50 at the moment. Moving on to the Dow, and here it was up and away at this time, well, at least on the close, so right on the top of that rising trend channel. We've allowed for it to go up to 45,000 at that August resistance line projection, but I suppose judging by the other markets, we might have to look for support to come in here. 42,800, the first support at the moment for the Dow. Worst case, I suppose, is back down to the 50-day line and 42,000, but very strong close yesterday, it has to be said, given the pattern of just being near the highs of the day, or at least the previous day. Moving on to Bitcoin, and here we were looking for 75,000, and we got it. In fact, this is the brightest of the markets we've looked at the moment, closing near the highs of the Trump victory day, and basically looking to stay above 75,000, which was the old June resistance line. Above that, looking for up to 87,000 by the end of this month, although I suppose you could say it would be next month, but given the way that Bitcoin can move when it moves, that's why we're saying as a best case up to 87,000 by the end of this month, which is the top of a triangle from back in March and the upper parallel of that June resistance line projection. Moving on to gold, which had a bit of a rug pull after Trump won, but so far we're looking at a situation where we've bounced off the 50-day line, a rising 50-day line, and the floor of a rising trend channel, 2660 above that, looking for a full move back up towards 2830, and well, the top of the channel at 2830, obviously that the previous high is 2800. Initial resistance would be the old support there, 2730 from last month. RSI still just below 50, so not quite out of the woods yet, and can't rule out a 2620 October support retest sometime in the near term. Moving on to the stocks, and starting off with Aptamer, which is still bumping up. Well, it's actually doing better than bumping along the bottom. It's gapped up early in the week, and we're looking for a proper clearance, I suppose, of the 0.25 pence area on a weekly close basis. Above that, we'll get up to 0.35 as soon as the end of this month. Plus point at the moment, apart from the two gaps to the upside earlier this week, is the way that the 50-day line is now rising, so it could be a bit of a change there. Speaking of change, Calnex has managed to make it through the 200-day line at 57 pence, let's call it, for the first time in a long time. I think the first time since, the first time this year for a start, since summer of last year. Top of the channel there at 71 pence. We're looking for that by the end of this month, while we remain above at least the 50-day line at 53 pence. Good look at the moment to DG Innovate. Here you can see that trying to get through that 50-day line, we bounced off the broken resistance line there from the beginning of the year. Want to see a weekly close above that 50-day moving average 007. Ideally, we break above the 0.078 level, let's call it 0.08, and head up to the 0.11 level by the end of this month. Obviously, we don't want to see any extended price action back below 0.06. Moving on to EnergyPathways, where one or two people were doubting the strength of the company, but we managed to bounce off one of our previous, or above one of our previous targets there, 6.6 pence, and above that, the next level up towards the 10 pence level, and then hopefully we could get up to our 13 pence target, best case scenario target, by the end of this month. So looking very impressive indeed. Next up is a couple of stocks which have the Trump trade effect going on for them. First one is Eurasia, which was flagged here ahead of time. Here we have the unfilled gap to the upside back on Wednesday. Still looking for the shares to break that rather pesky 2.6, 2.7 pence area. But with the gap higher and the 50-day line now rising, one would suggest that that could be on the cards, especially given the way that there's been an RSI bounce at neutral 50 as well. So multiple signals in there. Looking for 3.5 pence, perhaps by the end of the year rather than the end of the month. But if we can break that 2.6, 2.7 pence area, it could be sooner than that. Don't want to see any end of day closes back below the 50-day line as a stop loss. On to Ferrexpo, which has jumped beautifully during the week. And here, after yesterday's slight pullback, we've got a failed gap fill rebound. We are now back above our previous target there at 76 pence. Above that, looking for the initial 2024 resistance just shy of 92 pence. Ideally, there's no end of day close back below 70 pence now. Moving along with the next situation, which is Georgina Energy. It's been given rather a hard time of it since it came to market, but the suspicions that the shares had found a support line there from August around 8.3 pence look to be correct. We had a nice hammer candle yesterday, nice bounce today as well. Arguably a bounce on that uptrend line in the RSI window, but at least looking for a return to 10 pence plus over the next week or two, especially if you believe the comments on Twitter that the seller there is out. Remember, the last time we had a seller out, it was in Rome Resources under 0.3 pence, and that proved to be at least accurate. Looking on to the bet ultimate here, maybe by the end of the year, if the seller really is out, then 12 or 13 pence could be back on the cards. In fact, 12.5 pence is where the shares started, so it could be the case that anything under 9 pence is the buying zone. Moving on to another recent IPO, Helix Exploration, and here whether that's that spike there on the chart is correct or not, it looks as though things are shaping up quite well above at 23 pence and above, and looking for the shares to hit up to 32 pence by the end of next month, rather by the end of this month, if we can get a quick end of day close through 25 pence, which is the resistance for this month. All the while looking for the shares to remain above that rising 50-day line. Another bounce of the RSI above neutral 50 helping the cause there. Moving on to a stock which looks like it may finally be back in business in terms of the bull argument. We've broken back above the 50-day line today for the first time since June. That 50-day line at 4.8 pence. Above that, looking for the top of a broadening triangle from August, as high as 6.3 pence by the end of this month. The stock, which is also a belated riser, has been Minoan, and you can see that at least temporarily the shares hit our target there, bang on the nose, bang on that line there from December. Current position is we've fallen back a bit, but we have the 50 and 200-day lines rising, and that normally means that we've got a golden cross coming up and could look towards even 1.3 pence by the end of the year, while we remain above recent support around 0.8 pence on an end-of-day close basis. Moving along to Petro, and here it's been slightly difficult, but sticky at the lower levels, but bounced off the 50-day line there at 2.4 pence. Above that, looking for at least the 200-day line, 3.1 pence by the end of this month. Petrel is next, and here we've got another situation where we're trying to regroup, and we've done that well today with actually since yesterday, with the close above the 50-day line and push through yesterday's high, looking for around 1.5, 1.6 pence by the end of this month, while we remain above the 50-day line at 0.8 pence. On to the last few. The first one is Rome Resources, which I mentioned earlier. Here we have ongoing progress within, basically within that what looks like a mid-move bull flag situation. Ideally, we stay on the right side of 0.4. While we do that, then we're looking for the next leg up here as high as 0.63, hopefully by the end of this year. Moving along to United Oil and Gas, which thankfully has improved itself in the recent past, pulled back from the best levels there around 0.36, but while we're above that 200-day line at 0.21, still looking for not only 0.35 plus, but maybe as high as even 0.6 pence by the end of the year. But the key is staying above that 200-day line. Moving along to a couple of stocks which haven't done very well in the recent past. The first one is interesting in the form of Vistry Group. Here, horrible setup. In fact, the most horrible aspect is that we, apart from gapping down, then there was a fresh gap down situation. If you look back on the chart, you can see that the old uptrend line there was broken around the £7.60 level. Below that, we could have further losses towards the old 2023 support area around £6.50. So let's see what happens there. RSI at 15, which is extremely oversold, but not oversold enough to guarantee any near-term rebound. Moving along to the last stock of the day, which is Wood Group, and here, interesting that everybody's having a go at trying to pin the tail on the technical donkey. Current situation is that we've got this little, on the hourly chart, we've got this little resistance line there, and the shares have failed there around the 58 pence level. Below 58 pence, we've got the chance of a retest of the worst levels here at 46 pence. If we do break higher, and this is worth looking out for, then resistance on the way down was around 75 pence yesterday, and that would be the target. So basically above 58 pence, looking for 75, or while we remain below 58 pence, got the risk of 46 pence. That's it from me today. More updates over the weekend.